please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast on CNBC TV18 in the Mumbai News Center. I'm Manglam Malu and with me is Ekta Batra. Ekta, yesterday we did close below that 10,000 mark but managed to hold on to the 20 and the 50-day moving average, which we crossed on Friday.
Yes, absolutely. But overall, I think participation was just generally low and been an overall lackluster session. Let's see whether we manage to get above 10,000 more on a sustainable basis. These are top stories. NASDAQ snaps a 9-day winning streak. The Dow too closes lower after hitting an all-time high as Wall Street pauses before earnings season. Asian markets, however, higher in early trade.
Amid such mixed global cues, where is Dalal Street headed? Will the Nifty reclaim the 10,000 mark today? Well, the SGX Nifty indicates a flat start.
And in some important stocks and news today, Infosys fixes November 1st as the record date for its 13,000 crore buyback.
Right, but first up, let's take a look at the Asian markets now. Despite weak cues coming in from the United States, where the Wall Street took a pause ahead of the earnings season, the Asian shares are higher in trade, and that is because, remember, the Nikkei yesterday was shut, comes back after a 3-day long weekend, so seeing a bit of a catch-up out there, up 0.25%. A mild weakness seen on the dollar-yen as well. The shares which are gaining in Japan right now, we have the likes of Toyota, Sony, primarily the exporters, on the back of a slightly weaker yen, or at least the stable one. Remember, the markets opened after a long weekend. Korean markets too are up more than 1.5%. The Taiwanese markets, they're closed for a public holiday, so keep an eye out on that. The Straits absolutely flat, down about 0.1%. All this together does nothing for the SGX Nifty. That one indicates a slightly flat start at the open, so we'll keep an eye out on where that goes.
Okay, well, let's tell you about Wall Street then. US equities closed lower as investors looked ahead to the start of earnings season. So the NASDAQ composite ended in the red, snapping a 9-day winning streak. The Dow posted an all-time high before ending 12 points lower, while the S&P 500 also slipped in trade. CNBC's Meg Tyrrell gets us a wrap of all what took place on Wall Street.
U.S. stocks finishing the day slightly lower. The Dow off 12 points, the S&P lower by 4, and the NASDAQ down 10. American economist Richard Thaler has won this year's Nobel Economics Prize for his research on behavioral economics. The University of Chicago professor's study finding that non-rational human behavior can strongly influence the way people interact with Wall Street, from how they trade stocks and bonds to balancing their checkbooks. And Google today joining the growing list of tech giants to have discovered evidence that Russian operatives exploited the company's advertising platforms in an attempt to influence the 2016 election. Google's online ad business is the largest in the world, and the company has reportedly found that thousands of dollars were spent on ads by the operatives. And Walmart is introducing a new service that it hopes will greatly speed up returning items. Using a new app, customers will be able to generate a QR code for an item, then return it in the store for a refund to their account. Walmart hopes the process will reduce return time to just 30 seconds. That's the action from the U.S. market. You have a good trading day back in India. Back to Mumbai.
Okay, thanks for that. But the road ahead for the U.S. markets, Citi's Tobia Levkovich expects some outflows and inflows into emerging markets, while Mohamed El Erian of Allianz expects the Fed trajectory to be gradual and cautious.
You look at the net flow. So you look at the combination of both U.S.-oriented equity mutual funds and U.S.-oriented equity ETFs. So you bring both together, it's still a net outflow. That's the amazing part. We keep hitting records, and people are taking money out of the market.
Where are they putting it?
Europe, emerging markets, things like that. That's where you're seeing the flows going in.
I think the Fed, for now, is on automatic pilot. It will raise interest rates whenever it has an opportunity to do so without disrupting markets. And when it comes to reducing the balance sheet, it's like watching paint dry. There's not going to be nothing exciting. It knows that if it oversteps the bound and if it hits the brake too hard, it may unwind a lot of gains. And it also has an eye on other central banks that have had an enormous influence on markets. So it does care, and it's going to go very, very carefully and gradually.
Right, let's also take a look at what's taking place, or rather what took place in the European markets yesterday. The stocks finished mostly higher. The UK's FTSE, that one slipped by about 0.1% by close, while the French CAC, that one finished marginally higher. The German DAX, though, hit a new all-time high during trade after data showed that the German industrial output rose more than expected. Across the periphery, we were watching out for the Spanish index. That one was in the red at the open. However, paired some losses and ended in the green as we spoke. We have the Italian index also up almost 85 points. Keep an eye out on the emerging markets back, though. We saw sharp cuts on Friday's trading session, and yesterday too we saw a cut of close to 0.5% in the Brazilian index. The Russian index too saw a mild cut. But shifting back to the political crisis in Catalonia, Catalan leader Charles Puigdemont is due to address the regional parliament later today, and the Madrid government is worried it will vote for a unilateral declaration of independence. But the rhetoric that has been that he will not back out at the last moment. 90% of the people, remember, voted in his favor, but that was a skewed poll given that the turnout was just about 40–50%. CNBC Sri Jagaraja reports.
The independence movement does have momentum with it, and I think the rather forceful and disproportionate, some might say, response from Madrid to the independence referendum has really galvanised this movement. So there is an outside possibility that Carles Puigdemont and the Catalan leadership could stick to their guns. However, the counter-argument here is that the Catalan leadership is also under pressure on a number of different fronts to really back down on a full independence declaration for a number of reasons. Remember, the Spanish king has backed the Spanish Prime Minister, Mariano Rajoy, so that gives Rajoy political and institutional cover. And then, of course, we saw those rather wide-ranging unity rallies in Barcelona and other parts of Spain. So the tone arguably has shifted towards dialogue, towards reconciliation. Many were, in fact, dressed in white here in the crowds, holding banners that said "Parlem" or "talk" in English. But there has been a rather nasty undercurrent, mind you, of a fascist Franco-era symbolism marring these demonstrations, and the Catalans too have been very quick to point out that the police allowed these national unity rallies to proceed unimpeded, but when they voted, that was met with disproportionate force. Outside Spain, within the European Union context, the Catalan independence movement does not have a very long list of allies. Here's former ECB President Jean-Claude Trichet on that.
The Europeans, are backing the unity of Spain. I don't see any country or any major sensitivity in Europe which would not support the unity of Spain. It is absolutely necessary to preserve unity, and I'm sure that they will find out a way to reach that goal.
Okay, well, speaking on Brexit following Theresa May's comments on any deal with the European Union, former ECB President Jean-Claude Trichet says that the United Kingdom will face a tough time post-Brexit. Listen in to those comments.
It is really so sad that the UK has decided to leave. The UK, for the other Europeans, the 27, was the sanctuary of market economy, the sanctuary of civil liberties, and the sanctuary of the representative democracy and of democracy, the inventor of parliament. So we are very, very sad. I'm not at all optimistic on the capacity to Britain to get back. The situation is very difficult, and the expectations in the UK, as far as I see the public opinion, are not in line with the difficulty of that negotiation. So I expect still a lot of difficulty. In the case of the UK, the Remain camp explained very clearly that it would be catastrophic for the UK to engage in this direction. So nobody can say that they didn't know in advance that it would be a very, very difficult case. And that was said by the Remain camp. So it's not a question for the other Europeans to punish Britain. I don't think that there is any, I would say, will to punish Britain, but it's only taking the consequence of the fact that the UK, which entered in Europe in order to be part of the single market has now decided to get out of the single market. That's as simple as that. And of course, the consequences are very bad.
All right, then let's move on to the currency space. The dollar trades steady after edging away from a 10-week high overnight, taking support from underlying expectations that improved prospects for the US economy. That would prompt the Federal Reserve to raise interest rates later this year. The dollar index against a basket of 6 major currencies was a shade higher at 93.7 after dipping about 0.15% overnight.
In the world of commodities, oil prices edge up after overnight comments from the OPEC, which said that there were clear signs the market was rebalancing and as US production remained offline following Hurricane Nate. Remember, the OPEC will meet now on the 30th of November.
From the precious metal space, gold recoups previous week's losses as the dollar steadies.
Okay, time for a quick break now, but all the cues and news you need to work with this morning on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast this morning. Well, let's just surprise you of what took place on the markets yesterday. In fact, the Nifty breached 10,000 on an intraday basis, but failed to sustain higher levels and ended just about flat with a bit of a positive bias. The Sensex 2 closed with slim gains. The Nifty Bank mirrored the benchmark indices with gains of around 0.25%. The mid-caps, however, underperformed and ended flat with a bit of a negative bias. So overall, it was just a day of consolidation. We didn't manage to sustain 10,000. Let's see whether we do better in today's trading session. Anisha, in fact, joins in to tell us all of the cues this morning. Anisha, over to you.
Well, yes, Ekta, good morning. And yes, as you mentioned, we were not able to hold on to the 10,000 mark yesterday. Managed to close just around the 99.88 level. But what underperformed yesterday was the mid-cap space. Even if you look at the FII figure, the FII's net sell figure came at around 475 crores in the cash market yesterday, and the DIs did not match that number. The number came in for the net buy for DIs at just around 55 crores, so a bit of dampener coming in there. In terms of the cues for today, the biggest cue, the global cue that the world is looking for is that North Korea celebrates the foundation day today. Today was the founding day for the North Korean Communist Party, and the day has been flagged off as an event risk by the South Korean authorities as well, so the world would be watching out for that. In terms of the domestic cues, there aren't many in terms of the data that are coming out for the Indian markets today, but what would be coming out for the global markets would be the world economic outlook that should come out later today, US timing by the IMF, which should be tomorrow morning for us, but nonetheless something to keep an eye out on. In terms of the global markets, the US markets broke out of the gaining streak that we had been seeing in the last week or so. So all these markets, the NASDAQ, the S&P 500 as well, 1/10 to 0.2%. Europe, if you look at that, that was also a bit mixed. We had the pan-European stocks closing up around 0.2% higher, but the Spain uncertainty there continues to drag. In terms of the Asian markets, they also have opened up mixed. As far as the SGX Nifty is concerned, that is showing a bit of positive start for today's trade. In terms of the key levels to watch out for, the support level, experts say, is around 99.60 mark, which was the low point yesterday as well, and the key resistance level is around 10,016. Let's see whether we break out of that range or not. Back to you.
All right, Anisha, thanks a lot for that. Two levels we'll keep an eye out on, but individual stocks that you're watching out for in trade today?
Well, top of the list is Infosys. They have announced a record date to be as November 1, something that the street was keenly watching out for, so that has come out. In terms of NBCC, they met the analysts yesterday and the analysts have come back positive. The commentary has been pretty strong as far as execution is concerned. I expect that one to hold up in the green. Another positive coming out of the NBCC meet was for NCC, as we understand that company is L1 for 2,000 crore worth of order from NBCC. In terms of Ujjivan, there has been an intimation for RBI approval for conversion of the company from NBFC MFI to NBFC CIC, as well as the CFO of the company, Range Charles, resigned, so company to something to really keep an eye out on. Mercator, they have sold off one of its vessels for a value of around 25 crores that they will use to pay down debt. Not a very big figure coming in, but a sentimental positive nonetheless. Piramal Enterprises, the board meet is expected on 12th October to consider various fundraising options and scheme of amalgamation of subsidiaries as well. In terms of Sharon Bio, they have been granted an extension of 90 days for completion of insolvency resolution process with effect from October 8th, so something to keep in mind. Moving on to Lupin, that has received a US FDA approval for one of the generic tablets that is used to treat chest pain and hypertension. Ekta would tell us more about that, I guess. In terms of NMDC, we have September provisional number coming of iron ore sales at around 17.6 million tons. Arcom as well should be in focus. Biocon, I think Ekta again will tell us more. The target action date was yesterday. We haven't heard much about that drug, but something probably that the street would be watching out for. Back to you.
Okay, all right, Anisha. Yes, a lot to talk about when it comes to Biocon and Lupin. Thanks very much for that. Need to take a break now. But up next, we're going to bring you the biggest names of the energy world, an exclusive chat with the world's biggest oil company, Saudi Aramco CEO Amin Nasser. Stay tuned for that exclusive conversation.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, moving on, we have talking about the economy. Finance Minister Arun Jaitley is in the United States for a week-long official visit. He addressed students at some select universities and also scheduled to attend the annual meetings of the World Bank as well as the IMF. CNBC TV18's Malvika Jain, she's in the United States and she caught up with the former vice chairman of the Niti Aayog, Arvind Panagria, who has just returned after his stint with the government. Panagria brushed aside concerns about the growth and said India's macros are stable. Also expressed disappointment at the slowdown of the disinvestment process.
Today, we are macroeconomically very stable. Inflation is low, current account deficit is low, our exchange rate has been stable, foreign exchange reserves are in good shape. So macroeconomically, we are in a very good spot. Fiscal deficit is also very much under control. What has happened is that the growth rate has declined in the last 2 quarters below 7%. Now,
way below 7%.
Well, it's sure, but what I'm saying is that the other than these 2 quarters, right, 6.1 and 5.7, all other quarters prior to that, in the immediate vicinity, if you look at, have been 7% or more. So, therefore, there is only 2 of these quarters during which we see growth declining below 7%. There are good explanations for it, right? Because the government has introduced a number of reforms, but particularly if you look at it, demonetization, GST, and now we are also trying to clean up the NPAs. And these 3 major changes are going to lead to and are already leading to a lot of restructuring.
But would you call demonetization a reform or a hiccup?
No, this was a reform also. Remember that a number of things, this is a part of the Prime Minister's plan to address the issue of black money.
What about the issue of disinvestment?
This was one area in which we at Niti Aayog had made a very big push when I was the vice chairman. We had sent almost about 3 different lists. First list was even approved by the Cabinet Committee on Economic Affairs, the CCEA. And then it went to the DIPAM, the Department of Investment and Public Asset Management, which is where things then slowed down.
Right.
Some progress has happened at DIPAM. They have appointed transactions
Is there a particular
advisors.
reason why things slowed down?
So I don't know. I think this is where, I said earlier that different bureaucrats work differently. Whether it was the Secretary DIPAM or something else in the Finance Ministry, or I do not know. But I think this is really a good time because in the current budget, we are going to need probably a lot more resources to recapitalize the banks. Now, as we clean up the NPAs, it is also there's the related issue of restoring the health of the balance sheets of the PSBs, the public sector banks. And for that you need resources, a lot more resources than has been provided for in the current budget.
Right.
Where are those resources going to come from? And this is where I feel now, that this investment becomes that much more important.
Okay, well, that is some macro perspective, but shifting focus to the energy sector now. The biggest names of the energy world gathered in New Delhi for the CERAWeek Indian Energy Forum to discuss the market dynamics with regards to demand, supply and prices. CNBC TV18 was an exclusive partner, and here are some of the highlights of the mega event.
The broader energy industry and key consuming sectors to be a brand new chapter, to begin a brand new chapter of CERAWeek, the CERAWeek India Energy Forum. India will remain one of the fastest growing energy markets in the world.
India has really become so crucial in the world energy scene.
India is definitely very important for us. It's an important market. Also, the growth that we are seeing in this market is significant.
All right, the world's largest oil exporter, Saudi Aramco, has officially launched its India unit with a view to tap opportunities presented by the country's rapidly growing appetite for energy. In an exclusive interview with CNBC TV18's Manisha Gupta from the sidelines of the India Energy Forum, Ahmed Nasser, the president and CEO of Saudi Aramco, says he is interested in investing in India's downstream sector, refining petrochemicals and fuel retailing. Here is a slice of that exclusive conversation.
Investment opportunity in India is great. Mainly because of the new environment for economic growth, the new vision for New India, the Make It in India campaign with all what entails in terms of industrialization, job creation, the deregulation that is happening in the market, which makes it open playing field for everybody to compete. So it's a great market with significant growth that we have seen so far.
There are various reports on perhaps a JV is incoming, there are strategic partnerships. What kind of investments and how much are you looking to spend here?
The size of the investment will come with the type of investment we decide on. Sure. But definitely we're looking at something that is integrated from, we're talking about refining, petrochemical, marketing, distribution, including loops. So we are looking at something that is what we call it very integrated with our oil supply, going through the downstream and going through down the value chain. So we are open, we are discussing with so many partners in India currently. Each has a different plan, and we are currently in discussion with all of them about and hopefully we'll land on something soon.
So I also want to talk about the Saudi Aramco IPO, because that has a very keen interest from all over the world. If you could tell us on how much are you looking to raise, is there a timeline for that, and what are the kind of valuations we're looking here?
Well, all I can say about the IPO that it is on track for 2018. And that was the original plan, and it is still the same. Nothing changed about it.
That is good to know. We of course will keep an eye on that. But just coming back to India yet again, and while we are of course talking about strong growth demand going forward from here as well, what is your sense on all of this debate and upsurge of electric vehicles, and do you see that displacing that demand in any sense?
And we think, yes, definitely electric vehicles will grow and in the future, and we are seeing significant growth, that's no doubt. However, there is oil will be there for decades. As we have seen today, this year, the second quarter, almost 1.7 million barrels of demand. Earlier in the year, first quarter, we were looking at 1.3. Second quarter was 1.7. So there is healthy demand in crude oil. So it is a sector that we are seeing more and more demand for it. Add to that, there is a national decline in existing fields, and you're talking about something in the neighborhood of 5%. So that is also significant and require a lot of investment. So electric vehicles will be taking part of energy requirement.
Okay, well, let's all listen into what BP's Deputy Group CEO had to say on the company's plans for India.
Corporate strategy has been refreshed, and we talked about it to the market last February, and it revolves around 4 points. One is advantaged oil and gas in the upstream, and by that, it's very simple. We mean, in effect, cost advantage, so it's resilient to prices going forward, regardless of the environment, regardless of when demand peaks. The second point is market-led growth in the downstream. I'll come back to that for India, which is very important because our downstream has been performing exceptionally well, and we will continue to grow that. The third one is venturing in the low-carbon space and being very active and proactive in that space, and we could talk more about that. The last is modernization of the whole firm. How do we get simpler, more efficient? How do we use the digital infrastructure that's currently available to change the way we work? And so for India,
now yesterday the stock in focus was Spark, Sun Pharma Advanced Research. After its new drug under development, baclofen, that failed to meet the phase 3 targets. The management spoke to analysts yesterday, held a conference call calling this a big setback. Ekta, you were on the conference call yesterday. Any important takeaway?
Yes, absolutely. Well, Spark, the management did say that, you know, they are going to be assessing the cash flow requirements that they have within this week itself. They were actually quite keen on baclofen in general because this is a drug which has actually been launched in India successfully, but they could not meet up to the US standards in terms of the phase 3. The company generally does not want to launch, you know, early stage out-licensing programs, where the programs that they have in early stages don't want to be out-licensed, but now the company might be looking at that on a selective strategy basis. With regards to two of the key drugs which are actually filed from Halol, which is Ellipsia XR as well as Zelpros, the company is in the process of transferring it to a different site, not from Halol, away from Halol. And that the monetization of it could probably be 6 months away. Remember that they did mention or reiterate that the complete response letter or the US FDA response on those two molecules was that everything seems to be okay except for the fact that it is filed from the Halol facility. So that those were a couple of takeaways, that yes, they could even consider fundraising, which is an option, and also out-licensing as an option. In fact, let's listen in to the management of Spark from the conference call last evening.
This is certainly a setback for all of us. While it is indeed a dampener, we also realize that this is the nature of our business. We need to stay focused and execute on our portfolio. We have several important and potentially valuable programs at various stages of clinical development. From a cash flow standpoint, an outcome like this will certainly impact our ability to prosecute the clinical agenda fully. We may have to look at partnering some of our products earlier than our current plan. Expected cash flows from this program were important to us in the medium term, 12 to 18 months. We will review our program priorities and cash flows very closely in the coming weeks to understand our options and take important resource allocation decisions. There are two programs which are linked to remediation at Halol, which can give us early shots at cash flow, which, as you know, is Zelpros and Ellipsia. I take a 12 to 18-month horizon from a cash flow expectation standpoint. So, and our expectation is that either way, these programs should work out. And from a clinical data acceptance standpoint, the complete response letters did not set any ask in terms of additional data. So in that sense, as soon as we can have the facilities shifted, they are revenue opportunities, and we already out-licensed them, and there are incremental revenue opportunities there. We were expecting milestone payments coming from baclofen in both financial year 18 and also in financial year 19. So we may probably look at resourcing our late-stage programs while selectively out-licensing some of our early-stage programs. But at the same time, you know, this is too early to commit to any particular direction. That is one of the options that we have, and we want to look at all our options before deciding to take out a program and out-license early on, because we want to do that in a considered manner.
Okay, then with that, we'll slip into a short break. Come back, we'll focus on Pawan Goenka, he of M&M, that is, admits that Tata Motors have thrown in a new challenge in the electric vehicle space by lowering the price. More on that story when we return.
Welcome back. Well, on to an exclusive then. Anshu Sharma caught up with M&M's Pawan Goenka and asked him about what he makes of the Tata Sons chairman N. Chandra's comments in an exclusive chat with CNBC TV18 that Tata Motors will make profit of 10 lakhs per unit for the e-vehicle tender that they recently won, and if the company was looking to reduce cost. Let's listen in.
The way we see our costing, we don't see us making a profit at that price. But we'll obviously work on it. It's a new challenge that has been thrown at us. And we do realize that for us to be able to bid for phase 2, we have to come close to that cost. Otherwise, we cannot bid. So we'll work on it and we'll see what happens. And there are a few areas that we've identified already, like the battery capacity, which in our case is higher than what was the minimum required by the tender. So other things we'll look at. And I cannot say that we will get to a break-even point, but we'll certainly try and improve.
Where does M&M stand in terms of battery setup? We understand that battery facility is something that M&M is looking to set up. What will be the contours of this facility? Where will it be, and what will be the capacity, and what kind of market are you looking at?
Well, I think for electric vehicles to take off, we have to localize everything. Otherwise, the cost will remain very high. Therefore, we have to localize the battery, not the cell, because that's a very high investment and very high technology that we don't have, but the battery. We have to localize converters, we have to localize chargers, we have to localize the motor. And we are getting into each one of these things with a target right now of about 5,000 per month kind of capacity, and investing for that for each of these components.
Now we've come to a point where there's auction or bids are placed by the government for procuring e-vehicles. How far India has come in terms of electric vehicle, and what big plans does M&M have with this electric vehicle mission plan?
Well, first of all, M&M has been electric vehicles for 6 years now. We already have 4 products that we have launched, e-Verito, the E20 Plus, the e-Supro Passenger, and e-Supro Load. And we have at least 2 more that will be launching over the next year and a half. And therefore, we will have a fairly large suite of products available for different price point, for different applications. And we would therefore think that as India grows into electric vehicle, Mahindra will be right up in front to sort of lead the charge, if I could say that.
We heard from the government on the 3-wheelers, which ESL would be procuring, or the bids will come in for 3-wheelers, because that was also the plan, as well as the buses that government was focusing on with regards to public transportation. And what will be the participation like be for M&M?
We have heard the e-rickshaw and the e-auto tender is around the corner. Maybe a week, maybe a month, I do not know that, but around the corner. Mahindra is ready for the e-auto and the e-rickshaw. We will be ready for buses in about 2 months, and that's what I've been told, that buses will be about December, January when buses will come out. So we will be ready for that also. So we will participate in the complete value chain of electric vehicles with 3-wheeler, including e-rickshaw, with 4-wheelers, and with buses.
All right, moving on then to some top-level management changes. PepsiCo India chairman D. Shivkumar, he's quit the company to join Aditya Birla Group as the head of group strategy and business development. Shivkumar is expected to join the AB group in the next 3 months. PepsiCo says that Ahmed El Sheikh, the senior vice president and general management of PepsiCo Egypt and Jordan, will assume his role as the India CEO on November 1.
Okay, well, Kerala-based Kalyan Jewellers has kicked off its IPO process. We learned from sources that Warburg Pincus-backed company is in the process of finalizing bankers for its 2,500 to 3,000 crore rupee IPO. Priya Sheth has all the details on this.
Well, Kalyan Jewellers has finally kicked off its IPO process. In fact, what we do understand from our sources is that the company is looking at raising anywhere between 2,500 to 3,000 crore rupees through its initial public offering. Now, private equity investor Warburg Pincus has been investing in Kalyan Jewellers over the last couple of years and has invested about 1,700 crore rupees in Kalyan Jewellers so far. Now, through this IPO, Warburg Pincus could look at a partial exit is what we do understand from our sources. As of now, we understand that Kalyan Jewellers has been meeting bankers over the last 2,500 to 3,000 crore rupees through its initial public offering. Now, private equity investor Warburg Pincus has been investing in Kalyan Jewellers over the last couple of years and has invested about 1,700 crore rupees in Kalyan Jewellers so far. Now, through this IPO, Warburg Pincus could look at a partial exit is what we do understand from our sources. As of now, we understand that Kalyan Jewellers has been meeting bankers over the last week and has a couple of meetings planned with investment bankers over the next 2 weeks as well before it finalizes on who to appoint as far as this issue is concerned. Funds will be used for domestic as well as international expansion. Do remember that Kalyan Jewellers is also looking at entering into new international markets, and in fact, as far as the listing is concerned, this could happen anywhere between early or mid 2018. In fact, we did write to the company with this, and the company did say that they have not finalized any plans as far as the initial public offering is concerned, and that suggestions being made in this regard are speculative in nature. The company is focusing on consolidating its position as a trusted jewelry brand and continued expansion of their network as far as showrooms are concerned.
All right, thanks for that. With that, we'll slip into a short break. Come back, we'll focus on the cues to watch from the futures and options space.
Well, Manisha Gupta is now with us to tell us what's happening in the commodity space. Manisha, morning, over to you.
Morning, Ekta. Thank you so much for that. Well, let's start with the crude oil prices because that really seems to be making a lot of news in the recent few days and on the back of various OPEC statements that have been coming in. So Saudi Arabia, for one, has cut the November allocations by 560,000 barrels. They said the export for the month would be at 7 million barrels, which is actually higher than the last couple of months, where you have seen September and August actually see exports between 6.6 to 6.7 million barrels. But as I said, OPEC has been saying that they are looking at options of deepening or even extending output cuts beyond March 2018. And they have been using words like taking extraordinary steps to rebalance the market. And that seems to be working its way on prices. So you are looking at steady moves continuing in case of crude. Add to that the fact that there is a possibility that the U.S. President Trump may not certify Iran's participation into the global nuclear deal, and that in turn also has the prices on the higher side. It is the metal space which seems to be started well. China participation is back, and we've seen buying come back in gold and copper, nickel, aluminum. All of these metals are trading on the higher side. It also has to do with the tension in U.S. and North Korea, which has been supporting the precious metal space.
All right, Manisha, thanks a lot for that. Let's shift focus then to the equity space, the F&O space in particular. Now, yesterday, remember, the Nifty did not manage to rather hold on to that 10,000 mark, but managed to respect the 20 and the 50-day moving average. We saw net cash outflows of close to 420 crore rupees, but remember, the gross volumes were the lowest that we saw in October itself. So keep an eye out on the cash market space. But in the index futures space, the FIIs, they sold about 30 crores in index futures. And what was interesting was the battle between bulls and bears, because if you take a look at what they did in index futures, they bought an equal amount of calls, equal amount of longs as well as equal amount of short positions in index futures. Even in the index options, that one should come up for you. Close to about 881 crores is what we saw. The premium, however, on the Nifty futures premium increased. In index options, we saw more purchase of index puts. We saw some shorts running for cover in index calls and some unwinding in index puts. The put call ratio, that one moved to about 1.38. 10,000 put and 10,000 call were most active, together a premium of 180 rupees. Perhaps that's the range that that the smart money is looking for.
Okay, all right, Mangalam. Well, with that, we're going to wrap up our breakfast. We will leave you with our bullseye contestants and their picks for today. Thanks for watching.
NFC. For target of 412, stop loss below 374. My second buy call is on Delta Corp for target of 232, stop loss below 213. My third buy call is on Prestige Estates for targets of 316, stop loss below 288. And my last and final call is a buy on PVR for target of 1460, stop loss below 1359.
The first buy recommendation is on Reliance Naval. One can buy Reliance Naval for a target of 55.50 with a stop loss of 51.60. The second buy recommendation is on Canfin Homes. One can buy Canfin Homes for a target of 27.53 with a stop loss of 26.06. The third buy recommendation is on Sun TV. One can buy Sun TV for a target of 818 with a stop loss of 775. And the final buy recommendation is on HDIL. One can buy HDIL for a target of 59.40 with a stop loss of 56.20.
My first stock call for the day will be a buy on PVR. I'd buy it with a stop loss at 1366 and a target of 1430. My second stock call will be a buy on TVS Motors, which I'd buy with a stop loss at 667 and a target of 685. My third pick will be a buy on South India Bank with a stop loss at 31.5 and a target of 3270. And my final stock call will be a buy on Piramal Enterprises with a stop loss at 2700 and a target of 2835.